Welcome back to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And today, we're giving you a behind-the-scenes look at one of our many trusted partnerships here at Terra Firma.
We work with partners that focus on minimizing that risk first. And if we know how to manage and lower the risks there, the upside is a little more predictable.
We're essentially, for the individual that would like to invest directly into the upstream energy space.
Welcome back to Wealth Mavericks. We're so glad you're here. On today's episode, we're giving you a sneak peek into part of a video we made for our members with one of our trusted partners here at Terra Firma. And our intention is to give non-members a look at what's inside. We're very big on education here at Terra Firma. We aim to show you what's possible, guide you through how to actually implement the strategies you see out there, as well as introduce you to new strategies and new opportunities. And most of all, help you make good decisions about where to put your money. And we take great care to choose the partners we do, whether it's in business, real estate, or in this case, oil and gas. So in this video, you'll meet Steve Blackwell, our partner at InVito Energy, and learn just a little bit about the oil and gas industry and the benefits it offers, both from a tax savings perspective and a wealth building perspective. You'll also hear a bit from Bob about our philosophy and how we choose our partners. Now, obviously, if you become a member, you can see the entire video, along with plenty of others we have that outline our various tax saving strategies and alternative investment opportunities. We say it often, we help you play the game the way the wealthy do. And part of growing wealth is finding the right experts in their field and trusting them to help you reach your goals. So take a look.
Well, Steve, it's great to have you here. Been looking forward to this, and really, I know we've been working together for a few years now, and we've been working with a lot of our members. That this is a conversation. This is a topic that's I think is really important for a lot of our docs who, as you know, you have a lot of doctor clients already. That this is an area that provides the benefits that they want. So I thought what we could do today is just kind of get a high overview of InVito Energy, Steve, yourself, your team, and just kind of like an intro so our members can get a good feel for when we introduce you and your organization to them, they get a good feel for who you guys are.
Yeah, great. Well, happy to be here. Happy to have the conversation. So, personally myself, I'm the CEO and co-founder of InVito Energy Partners, along with my partner Jared Christensen. So Jared and I have been working together. So I was the president of a company called Petromax Operating, which was an upstream E&P company, actually here in the Dallas area. And Jared was hired over there. We hired him over there to run all of operations for us. So his background, he's a mechanical engineer out of the University of Tulsa. Right out of school, went to work for an E&P company called Unit Petroleum, which was a publicly traded company. Then he ended up over at Encana, which is a very large, at the time, they're still a Canadian company, but they've actually changed their name now. So he's had a lot of experience on the technical, on the field, on the engineering side. He's drilled wells in pretty much every basin in the lower 48. And then he came over to Petromax and ran ops for us there. And then when I went over to a company called US Energy to be the COO, I brought Jared with me, and he ran operations for us as well. So, and then a few years ago, we decided to start a company together where essentially now we're investing capital for retail clients into the oil and gas sector. So primarily what we were doing in the past was much larger projects with institutional type capital. And now we're essentially, for the individual that would like to invest directly into the energy.
A lot of guys like us, retirement doesn't stick, right? We're like Teflon. No. It's like, okay, what the heck am I going to do for years now? 100%. And so he came back in, and that's when he came back was about the time that he and I started working together. And what I love about your background for our members specifically is it's not just oil and gas, it's the foundation of finance and accounting, and led you to oil and gas. That oil and gas provides the best benefit to who you are as an individual, what you enjoy, what you like, but you still have that foundational aspect of finance and accounting. And to me, that's so important when we work with our partners. We've had a lot of oil and gas guys talk to us, as you can imagine, and every single one of them that I've met with don't have your background, which is why I think we get along so well, is because we understand how to communicate to a client from an actual finance and accounting background and what this means. Yeah, oil and gas. Okay, great. Here's the real benefit to you, and this is how the IRS views these things.
Yeah. Drilling into areas or investing into areas in oil and gas that are very exploratory, then you need full-time geologists on staff.
Yeah.
But if you're going to go into areas that are already proven up, hundreds of millions of dollars have been spent to de-risk an area, it's really an engineering and a data play at that point. And
Yeah. So let's do this, Steve. Since you segued into that, let's actually go into that a little bit more in depth of explaining how Envido goes through this process, what you guys are looking for investors, for our members and other clients like ours, and let's talk about that process and what you guys do.
Yeah. And so if I will, I'll back up just a tiny bit,
Yeah,
right?
please.
In oil and gas, you can invest into, there's the upstream, the midstream, and the downstream sectors of our industry, right? The downstream are the refineries on the coast. The midstream are all the pipeline companies and transportation companies moving the hydrocarbons around the country. And the upstream are the companies that drill the wells. The most common way to invest for retail clients directly into that is in the upstream side, where you're investing into wells.
Mm-hmm.
If you're investing into a well, you're essentially either buying what's called working interest or royalty interest. And you can buy either one of those into wells that are already cash flowing or wells that are about to be drilled.
Mm.
And so the difference between working interest and royalty interest is working interest is like equity. If you own working interest in a well, say you own 10% working interest in a well, you're responsible for 10% of the CapEx, 10% of the monthly operating expenses, and you receive 10% of the net revenue. Every well has a royalty rate on it that ranges anywhere from maybe 12.5 to 30%, right? The royalty owners don't pay CapEx and they don't pay monthly operating expenses. They get paid first. So the easiest example would be is if you had $1 million of revenue to distribute in 1 month, let's say the royalty rate was 20%, 200 grand's coming off the top, going to the royalty owners.
Mm-hmm.
The 800 grand pays the operating expenses, and then the net revenue gets distributed to the working interest owners.
Mm-hmm.
So in that segment, there's only one of them that specifically gives significant tax benefits up front, and that's when you invest into working interest into wells that are about to be drilled or have not been drilled yet.
Mm.
So that is 100% of what we specifically are investing into.
Right.
And then, of course, then it goes, well, what kind of drilling prospects are you investing into? And that's a little bit what I was referencing a second ago is the risk levels. There are massive differences in terms of risk on the type of projects that you could invest into, which are all normal for E&P companies. But for retail clients who are most retail clients are, and you tell me, but I think most retail clients, principal protection is at the top of their mind, right?
Yeah, so I think that's a good point to bring out that we always try to talk with our members about is building wealth is about managing risk. And whether it's tax risks, we call tax liability or having to pay taxes. If it's investments in stocks, bonds, mutual funds, it's the liquidity and the fluctuations. And if it's real estate, there's different risks in every asset class. And so I think that's the important thing that I always try to communicate to our members is that if we're able to know what our risk is in a particular asset, we work with partners that focus on minimizing that risk first because they know the risks. And if we know how to manage and lower the risks there, the upside is a little more predictable. Not guaranteed, but more predictable.
Tier one, engineer goes in and is going to look at that same location, and they're going to have probably at least a minimum of a dozen wells, if sometimes maybe a couple dozen wells within 3 miles. And so think about it from the engineer's job. Right now, they have all this data right around 3 miles around the location to create their data set, season production. And so now the statistical variance on what they're predicting to be true in terms of what we think that well will cost, what it's going to produce, therefore what does the cash flow look like and return profile look like, the statistical variance should not be great. And so if all E&P companies, so very important, all oil and gas companies are invested in 3, 2, and 1. 3 and 2 is like R&D money, right? So from the medical side of the world, it's the R&D money. If you're not constantly looking for new drugs or new medical technologies, you're not going to advance at all. If you aren't constantly looking for new areas, you'll eventually run out of tier 1 locations, right? Which is where they make the majority of their cash flow. But if you are investing retail money, right, and we just talked about principal protection, risk management, you cannot touch 3 and 2. You really can't touch 3, right? And so you've got to focus on tier 1 acreage, which is essentially going into an area where someone has already drilled a bunch of wells, spent hundreds of millions of dollars to de-risk the area. And so that is why specifically what we do is not only do we focus on tier 1 acreage, but we focus on what's called acquiring non-operated tier 1 acreage, meaning most of the tier 1 acreage today is owned. So we are going in and acquiring fractional working interest, which could be 0.5%, 1, 2, 3, 4, 5, 10% in wells being drilled by the larger E&P companies in areas where they have already spent hundreds of millions of dollars to de-risk it. And that's what we aggregate and put into a fund.
Nice. So that to me, that seems like it makes the most sense and that's when you and I first met and got introduced. I don't even know how we got introduced.
I don't remember either. It's been a while.
So it was a great blessing that we did, because when you explained this to me the first time, I was like, yeah, this makes so much sense from the way I manage our members' portfolios, because when we look at our members, we look at holistically. So what you just said is a portion of their portfolio. It's a piece in the pie. Then how can I, if I'm managing this and I'm getting royalties and dividends over a period of time, then that allows me to actually uncorrelate.
Yes.
It creates an uncorrelation with the most of where our doctors unfortunately are in their stock market, right? Because that's where traditional advisors will take them. So shifting funds here now makes it uncorrelated. We're taking a bit safer stance, though the average person will say it's riskier. But as an accredited investor, the technicality of managing the risk, like this conversation, brings that risk lower because we've uncorrelated it. That actually allows us to actually take a little bit more reward risk on the asset side with the stock market and equities by doing the same thing, but on that side.
Yeah.
Right. And so we're just in every, like I try to tell our members, as much juice as we can squeeze out of that orange, we want to make sure we do that. But then we still get the orange peel and we can use that as zest in our baking. And so everything should be used, not just the juice. Everything should be used.
Yeah.
Right.
I mean, oil and gas is a unique, specifically when you were doing the upstream, investing in a working interest, right? It's unique because it has such a binary benefit, right? A binary purpose, right? It's an investment first, right? In terms of where does it fit in your allocation, your portfolio, uncorrelated. But the second part of it is that tax benefit, which makes it so unique. So if you look at the largest player in our space and what we specifically do, where they raise most of the money, the broker-dealer community. But they've got 20 some years of being in this business, raising well over $1 billion. And they got 2 tiny funds that ever return capital. So the question someone should be asking from a due diligence standpoint is not why does it perform that way, but how are you still in business?
Yes.
How can you possibly still be in business?
Yes.
Well, I can tell you why they're still in business because I've read their offering documents. They make so much money up front. It doesn't matter if they don't perform.
Yeah.
And so I think that's just complete misalignment.
Yeah.
And so, I tell people all the time when you're getting into private placements, first off, read the PPM. Don't be lazy. You don't have to read all. You know how PPMs are. 3/4 of it is a bunch of legal jargon. There's a quarter of the PPM that matters, and specifically read the pages that talk about the fees.
Yeah.
Right? And if they're too hard to understand, or you can't really figure it out, then that's a red flag to begin with. And, you've seen our PPM or PPM, our fees are in 2 paragraphs on 1 page.
Yeah. Yeah.
So
Yeah, and that's
easy.
and this is why we like to do videos for our members as well. So because it's all those legalese, but also yes, whatever your fee is. But a lot of times I think we all understand we're going to have to pay a fee for something.
Sure,
But if
yeah,
you get a feel for who that person is and their process and how they created that something, that helps with understanding. Yeah, you know what? Steve seems like a legit guy, and if Bob's working with them and Terra Firma's working with Steve, then yeah, I see the fees. Which your fees are right. They're so in line and they're great. But even if they were, let's say they were a little bit on the higher side, because of these videos, a lot of times it gives them enough information because most people aren't doing this, right?
right.
And we want our members, and you're so gracious, as well as some of our other partners that we work with, to be able to have a one-on-one conversation with our members.
Yeah.
Right?
Yeah.
Not with all of them, right? You're not going to answer the same questions you just answered, but if there are more detailed questions that are available, you'll make yourself available, which we love.
So we hope you enjoyed this peek into our world. And as always, if you are ready to do something different, seriously lower that tax bill, and use the savings to grow your wealth, reach out to us because we are here to help. Thanks so much for being here. And until next time, go be a wealth maverick.